Another Federal Reserve meeting has come and gone, and like we expected, they doubled down on their decision to not cut interest rates anytime soon. And this is in the face of growing political pressure that's coming from our president week after week, where we know borrowing costs are still high, and he's asking for those cuts to come immediately. Because as we continue to move through the year, things might continue to pick up with these tariffs, with inflation, and that's something that Powell spoke about today. So over the next 10 minutes, I'm going to break down what exactly he's worried about as the year continues to go on, and why he isn't ready to cut interest rates just yet. But also, it seems like some other members on the board might also be a little worried about cutting rates at all this year. And that's something that kind of surprised me today when I was listening to them speak. So, like I said, I'm going to talk about those points, and most importantly, talk about how this is affecting us, right, as we go forward, because that's what we really care about, right? How are these decisions affecting us and our wallet on a day-to-day basis? So let's get into it. And we'll be back in 3, 2, 1, we gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dekimbe Smith, and this week, as I sip on my chamomile tea, I'm breaking down the Fed's decision to not cut rates once again for the fourth time this year. And now this comes once again at a time where Trump is saying this numbskull needs to go ahead and cut rates because we are just spending too much money out here. Borrowing costs are high, and people like me and you need a break, right? We need a break on our home loans, our credit cards, our auto loans, all these different things. But if this Fed says no, then we kind of got to go with the flow there. And that's where I'm sitting back saying, okay, well, with all these different things that he's looking at, from inflation right to the job market, what's going to be the thing that finally, makes him decide and say, well, now I see enough reason for us to cut rates? And that's what a lot of the other people were sitting back, who, when I was watching the press conference, they were also asking some of the same things. Okay, well, what is it that you're waiting for? What are some things that you need to see happen in this economy for you to go ahead and decide to cut rates? And one of the main things he talked about was how tariffs start impacting prices throughout the summer and throughout the rest of the year, right? I talked about it in a couple of videos, I don't remember when, a couple of weeks ago, maybe now at this point, where, I was talking about how tariffs might start impacting the prices, especially when it comes down and trickles down to how much the consumer has to pay, right? Me and you, because a lot of businesses are already saying that we're not going to go ahead and, just eat these added costs to our imports and to our operations. So we're going to have to pass it down to somebody, whether that's maybe another person down the chain of that, supply chain, or whether that's the end consumer. That's the thing that Powell is waiting to see, how it really trickles down and affects people over the rest of this year, right? Because they're saying that we have no idea. A lot of the, reports that we're seeing from when it comes to, like the producer, like Austin Dex, when we're looking at, how much they've had to increase their prices, we haven't seen much change yet, because they were able to kind of stock up earlier in the year, knowing that these tariff conversations and impacts, might come into effect throughout, later, closer to the summer. So a lot of them said, let's start shipping over more goods, building up our stockpile, so we're not stuck with the supply chain issue like we were a couple of years ago, and we won't have to worry about boosting our prices too early before things actually get finalized with these tariff talks. So like I said, that affected the reporting that we were seeing from these producers early on in the year, from the businesses early on in the year, because we really don't know what's going to happen. Now, I know the Trump administration recently came out and said that they have a deal with China, but I don't think that's actually been finalized yet. I think it's still kind of being drawn out, and we still have to wait to see what those final numbers look like, right? Is it going to be a 50% tariff, a 45%, 30%? What is that going to be? And how do the businesses then go and deal with it once everything is set in stone? So, like Powell was saying, once we see those things start happening, which is going to take some time, right? We can't just go ahead and make a decision right now and then say, okay, then we'll see how these things impact. He said, we're going to wait and see what the data shows, and then we'll go ahead and make a move. If we see, that these tariffs only have a one-time increase on the prices, right, and it's not really affecting the consumers and their confidence when it comes out to going there and still shopping for these things, then, like you said, he might feel comfortable at that point making some adjustments. Well, honestly, he said it can come a lot sooner or a lot later than anyone expects. He doesn't have anything set in stone because he is looking for the information. So when the information does start coming up, when we can see longer trends over time, then they can give us some more concrete information on what's really going on with this new policy talk. Because Other than that, he said the labor market is still strong, right? We are seeing, of course, we're seeing people losing their jobs, but at the same time, people are still able to get jobs. We're not seeing a whole bunch of people who are laid off for a very, very long time and unable to go out there and find new work. They did also say that they expect the year-end inflation rate to go up by about 3.1%, where they were originally projecting, I believe, 2.5%. So another thing that I thought that was interesting from Powell's conversation today was the distribution on the votes, right? Like, who believes there should be a rate cut now? Who believes we're going to see one later in the year, and these kind of things. Now, when he was talking about this, he said that 10 officials still see 2 or more cuts coming before the year end of the year. And the rest, and I think it was about 9 of them who saw maybe 1 cut or no cuts coming at all. Now, why do you bring this up, Dekimbe? Because I'm really interested to see if more people start leaning towards the side of saying 1 cut or no cuts throughout this year as this thing continues to shake out, like I said, with the impact of tariffs. Now, they have this thing that they call the dot plot, right? And like you say, you can see the distribution of how the votes lay out. And like I said, if this is something where you see more people leaning over towards the part of, oh no, we don't need to cut rates this year, or maybe we only do 1 rate cut, then when this trickles down to us, the people who are going to go out and be spending in the economy, we're not going to see much relief to our wallets when it comes to those borrowing costs. So we have to keep that in mind because, like I said, affordability is a growing issue as things continue to get tighter and things continue to get more expensive, whether it be the home prices or just the prices of things that we go out there and shop for. We have to be aware of what their decisions are going to be and how we're planning these things out, right? Especially like I talk a lot about home buyers. If you're somebody who's looking at the market and saying, I'm going to wait until rates cut maybe by 0.25% or 0.5%, then you might be waiting a lot longer than you expected and delaying yourself some sort of progress or just delaying yourself the ability to go out there and buy that now. So like I said, when we're having this conversation, consider those things and say, okay, well, if they really don't seem to be in a rush to cut rates, where do I get the idea that these things are going to come any sooner? And it's not just going to come because the president is talking about it in a press conference about how Jerome Powell needs to cut these rates immediately and he's holding up the economy. We're spending $600 billion plus in interest on all these different things. It really is just like a lot of fluff and it doesn't do anything to move the ball forward at the end of the day. And like I said, when we take a step back and look at the people who really do kind of had the chips all in their hand, right? The Federal Reserve really holds the chips at the end of the day. They're the ones who are going to go ahead and make the decision on whether or not the economy is in a good enough place to start cutting rates. Because like I've talked about before, if they cut those rates too soon and it's not at a time where the economy is ready for it, that can send the cost way up for a lot of these goods and put us in a position where we can't come back from, right? May tank the economy, send us in a recession that none of us want to be in. And then what do we do from there? I know Trump was saying, well, if things start getting inflationary later down the road, then we can just cut the rates again. That's not how things work, people, right? We know these things take months and months and months at this point, right? If you've been listening to me for long enough, we know that it takes months of looking at data from prior months, right? From 3 months ago, 4 months ago, 6 months ago, and saying, okay, what has been going on over this time period? And now let's go ahead based on that and set up the forecast going forward. One quote that I took away from Powell that he said today was monetary policy has to be forward looking. This is elementary, right? Kind of like Sherlock Holmes. This is elementary, my dear Watson. And he said, this doesn't have to be more complicated than that, right? We can't just be going day to day, week by week and seeing how things are going and saying, okay, well, now I think this is a good time to cut rates because this week looks pretty good. Then, like I said, what happens 3 months, 4 months down the road where just based on today's decision, now it sets up a domino effect of just bad consequences that we didn't want to deal with and that nobody intended to deal with or has a plan to deal with. So that's why I said I'm definitely standing on the side with Powell right now, despite what Trump is saying. And trust me, I definitely want prices to come down. I want those loans to become cheaper because obviously it'll help my business, right? It'll help me also go ahead and buy a home. And these are things that I'm looking at and saying, okay, when's the most opportune time, right, for me to get in? Right now, I'm not in any position where I have to jump and say, okay, I'm going to go buy now. I'm perfectly fine renting. And that's another thing I want to say too. Don't feel like you have to pressure yourself to jump out there and just buy something because you see people talking about it or you feel like, you're getting left behind in the rat race that is society. Take your time, pay attention to what's going on, right? Like I said, in the overall picture, and just educate yourself so that you can make a good decision when the time is right for you. Maybe the time is right now. Maybe you're seeing, like I talked about in last week's episode, or maybe it was 2 weeks ago now, where there are more listings that are coming up in the market. There's more opportunities for home buyers, right? There are people who are sitting there who may have been saving money the last year, the last 2 years. This might be a really good time because you might be able to go out there and negotiate and say, hey, listen, I saw that was sitting there for a little bit longer, and let's go ahead and take 10,000, 15,000 off that price, and then that'll help you in the long term. Or you're somebody trying to figure out, okay, like, how do I manage my credit card debt, right? How do I manage these things that just continue to go up as these interest rates continue to be stagnant, right? My credit card APR is at 25%, 20%, and you're looking at that interest just continue to grow month over month. Well, this is where you're saying, okay, if I'm not going to get any relief from that side, do I start doing, making more aggressive payments on a weekly basis, on a monthly basis? Do I go out there and get a side job so I can start really tackling some of this debt? Because if I don't, it's only going to continue to grow as that interest continues to be stagnant. Now, these are things I talk about from experience, right? Because like I said, I've been through the credit card roller coaster where I've crashed my credit score and got it back on a track where we're working our way back up. And these are things where I don't want anybody to deal with these issues just from a lack of not knowing, right? Not understanding, okay, how does my credit card rate really impact the amount of debt that I have there? And why does this debt keep rising, right? Why is the interest charges that are coming in there just as much as the minimum payment that I have to make? So that's why I like to dive into these topics and break it down and just, bring it to you in a way that, that simplifies what's going on in the bigger economy, the bigger government. So like I said, we know what to do as we move forward week after week. And sometimes this information might sound repetitive, but like I said, there's beauty in the simplicity. And it took me a very long time to realize that. But when you can kind of keep track with the simple things, stay consistent with it, keep reading, stay informed, all of this becomes a lot more clear, and you actually can put together a very clear blueprint for what it is that you need to be doing. So we'll have to keep an eye and see what the Fed decides to do later on this year as tariff conversation continues to roll out and things finalize. Will they really start driving prices up month after month, or is it just going to be a one-time impact? Tariffs go in and businesses and the producers know how to deal with it, so it really doesn't affect the consumers. We have no idea. We have to sit back and see what happens, and we have to see what the Fed decides to do and see what Trump decides to do, because the pressure on that side continues to grow, and he's putting things out there like the idea of a shadow Fed and other people who might be able to take the position, and really seeing what the legality might look like if he has to go ahead and replace him. So these are things that I'm going to continue to be tuned into. These are things that I'm going to continue to be bringing to you guys. So until next time, stay tuned, stay curious, and as always, enjoy your first sip.